Welcome back to day 2 of our Deconstructing Industry Reality Check series explainer. Today, we are unpacking a massive, systemic transformation. We're talking about the sweeping shift from the old era of shadow banks right into the cutting-edge frontier of AI-driven wealth managers. We like to call this the proactive pivot, and it is literally rewriting the rules of global finance as we speak. So let's decode what this actually means for the markets.
We've got a lot of ground to cover today. We'll quickly trace the history of financial safety nets, explore the shift to proactive finance, see how this is democratizing the global market, look at global trends and oversight, and finally, weigh the new opportunities against the digital risks. Let's get right into it.
Okay, let's dive into this. Chapter 1, the history of financial safety nets, or what I like to call the reactive past. So historically speaking, our financial safety nets had one really fatal flaw, right? They were entirely reactive. Think about it. Ancient sea cargo insurance was born only after catastrophic shipwrecks started happening. It's kind of like putting on a seatbelt after the crash. And even when we jump to 1774 with early mutual funds in the Netherlands, or the 1960s when NBFCs started popping up to offer credit, these systems were still fundamentally built to just respond to financial realities after they had already taken shape. Just look at NBFCs, non-banking financial companies. If you aren't familiar, these are basically institutions that provide credit to everyday people and businesses that traditional banking systems just completely ignore. Now, they were a real game changer for sure. They acted as this crucial safety net for excluded capital, but their model was still just a reactive patch, stepping in only where legacy systems had already failed to operate. Which brings us to the predictive present. Section 2, the shift to proactive finance. And this brilliantly illustrates the evolutionary pivot we're living through right now. We are witnessing a complete inversion of how financial safety nets work. Institutions are finally ditching those old reactive models, where they basically just wait around to absorb losses. And they are fully embracing predictive systems. Today, massive financial sectors are using incredible data and tech to anticipate what's going to happen and act before the dust even settles.
Take the insurance sector, for example. You know how adjusters used to show up days, maybe weeks after a disaster? Well, not anymore. Today's advanced platforms are leveraging some mind-blowing tools. We're talking satellite data, sweeping automation, and AI claim assessments. They actually preemptively map out the loss and execute settlements almost instantly. It's absolutely wild.
And this proactive pivot completely transforms alternative lending too. Modern NBFCs are totally moving past those rigid conventional banking metrics. Instead, they're looking at alternative credit scoring, evaluating a person's broader digital activity and behavioral data points. Because they can actively predict creditworthiness, they're unlocking capital for folks who would have been automatically denied under the old legacy rules. So what does this mean for our wallets? That leads us to Section 3. Democratizing the global market, the inclusive shift. Asset management is evolving incredibly fast right now, primarily through tokenization. If you're wondering what that is, tokenization is simply dividing the ownership of traditionally high-value, illiquid assets into smaller, far more accessible digital units. Think about things like commercial real estate or fine art. Normally, you'd need millions to play the game, but by fractionalizing them, it's like slicing up a massive, unreachable pie so regular retail investors can finally buy a piece. That million-dollar barrier to entry, completely gone. The result is this massive, much-needed democratization of global finance. Retail investors are finally gaining institutional-level access, and because of the huge expansion of digital public infrastructure and open banking ecosystems, we're seeing this frictionless movement of capital. Money just flows quicker, and those heavy institutional walls are literally coming down for everyday retail investors. Now, let's zoom out a bit. Section 4, global trends and oversight, and how this whole ecosystem is taking shape. If we look globally, this transformation has some really interesting nuances depending on the sector. In insurance, there's a huge pivot towards holistic health and financial protection. In asset management, we're seeing active strategies making a strong comeback to compete in tighter markets. Microfinance is expanding rapidly but under much stricter regulatory oversight. Meanwhile, the tech sector is scrambling right now to build robust AI governance frameworks to make sure all these powerful new predictive tools actually stay transparent. So we've got unprecedented access and hyper-fast liquidity. But we really have to ask, at what cost? Because whenever you wire up a global financial system with automated predictive intelligence, you are bound to introduce entirely new categories of vulnerability. It's time for a reality check. And here it is. Section 5.
New opportunities and digital risks, the reality check. The balance we're striking here is incredibly fragile. On the upside, yes, we get inclusive participation, far greater accessibility, and lightning-fast liquidity. But the downside? All this unprecedented access exposes the entire system to rapidly evolving digital risks. We aren't just talking about simple fraud anymore. We've moved into the terrifying new frontier of automated cyber threats and highly sophisticated AI-driven financial attacks. If this proactive pivot is going to survive, global regulators absolutely must neutralize these vulnerabilities. The financial ecosystem is transforming at light speed. Those old reactive safety nets are completely gone, replaced by a hyper-connected, predictive web. But as things continue to evolve, we are left with one massive question. Are our institutions truly ready to defend this automated future? Thank you so much for joining me for this explainer. I'll see you tomorrow for day 3, where we're going to deconstruct information technology. Until then, stay curious.